Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Clint Hinkle, enterprise and A&E executive in the SaaS industry. Welcome to the pod.
Thanks for having me. Happy to be here.
Dude, you are one of my favorite creators on LinkedIn just because of a never say die attitude that you exhibit. I remember way back in the day, I think it was like 2021, when I sort of when you came up on my radar, there was this hashtag that was trending, Team Clint. You remember that?
Yeah.
And that was when sort of the whole of LinkedIn basically just came together and promoted your spirit, I guess, for you to find the job that you want, right? That ideal job. And that it was in tech.
Yep. Yeah, that was my secret of how I broke into tech. I just started posting on LinkedIn, and like 30 days later, 600,000 views. I had like 4 job opportunities.
How difficult is it to break into tech, especially coming from a non-tech background?
Yeah, it's extremely hard, especially for me. I didn't want to have to take a step back into the entry-level role. Even that said, it's still hard to get in as an entry level at a good company. And if you're trying to make the leap that I did, to where you kind of I didn't just bypass the entry level, I bypassed like 3 levels. And but it was my experience warranted the level I came in at. But in the tech industry, they are so obsessed with industry experience that you can be 16 years into your career like I am, and then still want you to take a significant step back into the entry level role.
What is entry level in tech?
It's a SDR, sales development representative.
Okay, cool. But I mean, if you've got sales experience, let's say, for instance, you've got 16 years sales experience, and what is the difference selling tech and selling something else?
I'll let you in on a little secret here.
Cool.
Not a damn thing. Not a damn thing. It's all the same fundamentals, the same shit. You do use some technology that maybe not every company has, but it's very intuitive. It's not advanced. I think what it is there's a lot of people in leadership in tech that have only been in tech, and so they think they're special.
So gatekeepers, right?
Yeah, and here's what happens is tech pays really well. So you could be a mediocre talent, but be making really good money, and so you kind of think you're better than you really are, to be honest.
Okay.
And I see a lot of that in tech, where people make good money in their mid-20s and they think they're geniuses, and then they get into leadership and they want to demand it's people who've only been in tech, because they don't really know any different. They don't realize outside of tech, most people don't have SDRs generating leads for them. Most people aren't using cadence tools and robust tech stacks. We're just out here the old-fashioned way, grinding it out, no playbooks. And it's actually, in my experience, harder. My experiences have been harder when I wasn't in tech than they are now in tech.
I would have thought, tech could do with an outside perspective, right? All those things that you just mentioned, looking at it from a different angle, yet they seem so just closed off to anything new, I guess. And now we have this massive round of layoffs, but still there are so many people looking in to get into tech. Is it just for the money, or is something else?
I think primarily the money, and then I think secondarily, since COVID hit, most companies, went remote. So the reason I didn't get into tech in the past years is I would have had to have moved to a major market, and I wasn't willing to move just due to my family situation.
Yeah.
So I think now there's the appeal of remote work and not having to go to the office. There's the appeal of making more money. I mean, to be honest with you, the deals that I've closed outside of tech and businesses I've scaled, if I would have done exactly what I've done in the tech industry right now, I probably wouldn't be working for anybody. I would be financially doing really good and would probably be one of those consultants charging, an arm and a leg.
Yeah.
So it's a lot more lucrative, and I think a lot of people realize that. I mean, I tell everyone about tech because here's the career path. Your entry level role SDR, you're gonna have a earnings potential of 80 to 90 grand, like entry level position. And if you're good, you can move up out of that position in 9 to 18 months into a role where you could be making 125 to 150. And if you're really a go-getter,
What's the next step? Sorry, what's the next step? SDR, A&E? No, what's the next step?
Yeah, typically it's AE, and it's considered a SMB AE, small to mid-sized businesses.
Okay.
So what you go is you go small to mid-sized business, and then you go to a mid-market rep after you do a year there and get promoted, and your earnings there are typically 150 to 225. And then if you work your way up to the enterprise level, that's where you get to the 300s, or if you had a company like mine, the top reps can make seven figures. And then the step above that is strategic, where you're working even bigger deals. And so the path is incredible. So if you got to work hard, but within a 5-year period, you can get to entry level role, and within 3 on the early side, 5 on the long end, you're making 200 plus.
But the people don't want to work anymore, right? No one wants to work. Yeah. That's at least my perspective.
Yeah,
everyone wants to get in. It's like, okay, cool. I want to make 200 now. I want to make 300 now. But that's not how the world works.
Yeah, and I see some getting in the SDR role, wanting to get out, trying to get out too soon,
yes.
or the biggest mistake I made is how I picked companies when I first got into tech. I've been at a lot of seed stage, which you can't really get any earlier than seed stage. And it's just a tougher environment. So I see some that would be better off hanging out in the SDR role longer and being a little bit more picky about picking the right AE role at the right company. The right company makes all the difference in the world, because there's a lot of companies where the earnings they post aren't realistic. I went to one of them and I made 50% of what I thought I was going to make.
Wow. Okay. I saw a while ago on LinkedIn, you had a sort of a vetting system or checklist where you sort of, pre-check those things now. Care to share?
Yeah. So the number one resource for it, and they're not paying me to say this, but is
they should.
Well, it's a company, full disclosure, I do have partnerships with that I help promote, but they're not paying me to say it on this podcast. So RepView is a number one resource. If people DM me, obviously I post about it, but it gives you an option of like being able to see if people are really hitting quota. Because you could have, let's say, a 200K on target earnings at one company, and this is the company I was at. You have 15% people hitting 15% of quota, and then you have another company where 80% are hitting it. Which company do you want to go to?
Yeah, absolutely.
It tells you product market fit. That was big for me this go around, and the company I'm at had product market fit listed really high on there. And getting into tech, a product market fit's very important. And it tells you things around culture, things around like training. It gives you a full picture. It's kind of like Glassdoor, but 1,000 times better.
Yeah. If 15% of, or if a significant amount of SDRs are only hitting 15%, what are we looking at? Is it SDR problem? Is it a management problem, or is it a product problem?
I think it depends on the situation. In my particular case, it was just overhired. There wasn't, like in my case, we had 3 reps covering what should have just been 1 rep. So that was my instance. So I think a lot of I will say this, I don't know how that's going to look going forward, if that will change, but early last year when companies were hiring like crazy, growth at all cost, it's we're going to overhire. No, we're going to let go about half the team, but we'll hit our company number.
Yes.
And that's just the cycle. And so I don't know for sure. I know companies are being more conservative in their hiring now.
Yes.
So I don't know how that translates to quota attainment, but we'll see.
Well, I think it was a case of them saying, "Oh, cool, we'll just 100x our hires and we'll 100x our profit," which is stupid. I saw Morning Brew, for instance, in the media space, somewhere where I play. They came out and said, "Okay, cool, we overhired, right?" Which is fair play, okay, to them, full disclosure. But in the same instance, now they go out and they acquired another company, and I'm like going, cool, you've got cash to spend on investments and mergers and acquisitions, but you just let go a massive chunk of your workforce. Did you at least check if there was scope for them to do something else, or ask them to take a pay cut? No, it's just like, oh, boom, sorry, we made a mistake. Off you go, and it's really not ideal.
Well, I think some companies are using it as an excuse to, because to do a mass layoff when the market's great looks really bad, but to do it when everyone else is laying off a bunch of people, you can kind of get away with it without as much bad press. And so, and I think you saw this during COVID as well, that some companies just used it as an excuse.
That's a good point.
I think we're definitely seeing that, because I've seen companies who did a lot of layoffs already posting for positions that are open that are the same positions they laid off. I don't know.
It's crazy. That's mental.
I don't know if the comp packages are lower this time around, or I haven't done enough research to look into the details, but it's interesting. And I've seen some companies that did big layoffs that are back sending out swag to all your favorite LinkedIn influencers and put hosting events. And so it's interesting.
Such a bad look. Anyways, but the news cycle moves so fast. Drop bad news into bad PR and hide it between all the noise makes, actually, now that you put it like that, very good sense. Not morally, but just from a business perspective. Let's shift gears a bit, talk about something that you don't talk about, but sometimes I see a few comments on my posts. It's you actually you dabbled in the financial industry. You have a bit of a track record. Like to sort of go into that a little bit, just because you never talk about it. That's fine.
Yeah, for sure.
You said something about, and that's what got my attention. I had like the 7 series, and that's sort of when I okay, so that's interesting. That's an interesting departure point that you equated, the BMW 7 series to sort of the financial industry.
Yeah, so like to go way back, when I was in high school and had my own mowing company, my friend's dad ran the local AIG office. And so I never put any of my money in a bank account. I put it all in the market. Like even when I was like literally 16, 17, 18, I didn't know what I was doing, but knew enough to I didn't grow up with a lot of money. That's actually probably.
If you had TikTok back then, you'd be a gazillionaire by now. Because
Yeah.
you were doing that stuff before it was cool, right? 16, 17. Yeah, sorry. Go on. Fascinating
Yeah,
story.
that was a long time ago. I'm
Yeah.
around the corner from 39 now. So but yeah, so got into markets then. Um, and then just for a while, didn't really have enough money to do anything.
Mm.
And then later, when I got my first job out of college, I was putting, this was probably not good, but I was putting 10% of my check into the company 401k.
Okay.
Just planning like ahead, like if I don't see this money and invest it. And so was doing that for a while, then got out of work and I had a pretty good amount of money in there and was self-managing it. I remember being in like Facebook at 16, Netflix at like 30, Amazon at like less than 200, Apple, before all the splits, really cheap. And the worst thing that ever happened to me.
Uh-huh.
So my wife got out of college. She started working. So we had a good combined household income. And I was starting to put
And no
outside,
kids. No kids.
no kids. That was the key part. Yeah, we make
Yeah.
way more now, but we have kids. We feel broke.
Yeah. It's that thing. I saw a term the other day called it's DINK, double income, no kids. And I'm like, wow, there really is a term for everything these days.
Yeah.
And I was
Yeah,
like, oh, that sounds good.
that's what we were. But
Yeah.
I bought like 5 grand in Facebook at 16. I had no clue about earnings, no clue about anything, but they reported earnings the next day and beat, and the stock went crazy. And like it was the worst thing to happen to me because I was like, oh,
This is
you know,
easy.
and then I went down this rabbit hole of and there was a period where I was in between jobs as I was in Georgia working to get my real estate license.
Mm-hmm.
And I was also taking courses on trading, and I got this is where I messed up. I got big time in the options.
Mm.
And so fast forward over to the next 7 years.
7 years.
I've had accounts, I've had weeks where I made an absurd amount of money, and I've had weeks where I lost, for me, an absurd amount of money.
Yeah.
Out of the money options is the fastest way on the planet to make money and lose money, in my opinion. Weeks, let me specify, weekly out of the money options. I mean, I've turned an account from like 2 grand to 100 grand in a week and given it all back. Like I've blown up so many accounts. I traded futures hardcore for a while, which too many hours in the day of available trading. So that was a big distraction. Um, had a VP of sales job, got out of that and kind of did a follow your passion moment and went to a $300 million options fund.
Yeah.
I got my I got my Series 7. Dude, I already knew so much about the market from all the training I did that like the weekend before I took my Series 7, I was out of town with family at a UT football game versus Auburn, partying, having a good time, and I walked in and just knocked the Series 7 out. Like, not that I didn't study for it at all. I studied for it for sure, but like I just already knew a lot of it from being so heavily in the market for so many years.
Mm.
And did that, man. It was awesome having institutional tools to day trade with.
I can believe you. I can believe you. And how did that go?
Oh, we continued to blow up accounts. Like here's what I tell people who want to get into trading now. Our portfolio manager who managed all $300 million, like he decided what we invested in. We had a certain option strategy we ran that was about $100 million trade every Friday. And he was top of his class in finance. Like Goldman Sachs was recruiting him, and then the financial crisis happened. And him and I both, I've seen him, average down like, dude, quit doing it, just cut your losses, and him blow up his accounts.
Yeah.
And what I tell people is like, when you're day trading with a small account trying to get, outsized returns, like you will blow up your account eventually because you'll be conservative. You'll get some big unexpected wins. You'll take bigger risks. You won't keep your position size accordingly. So we had a lot of fun. We had weeks we made a lot of money, but in the end,
looking back, what would have you, now knowing what you know now, what would you have done different? Or is it nothing because that's just your personality?
no, hell no, I would have done stuff differently. I should
Okay,
be
cool. Let's go. Let's before I let you leave, let's dig into what you would have done differently.
Well, if I really want to keep it simple,
Yeah.
this was probably almost 8 years, maybe. Knowing what I know now, I just would have bought Bitcoin at like $2. Like, hands down, that would have been the easiest, highest ROI. And I'm not like I do like crypto and stuff. I'm not like a maximist or hardcore.
Yeah. Me neither. No, I'm a realist.
Just from a like knowing now what was the highest ROI.
Yes.
But what I would have, I think what I could have done that's maybe in between is I had the right idea. Had the right mindset, the right idea. I knew the way for wealth is to use my money to create wealth. And if I just would have, and my strategy for picking stocks, I just picked what I knew and what I used.
Okay.
And if I just would have done that and kept, just every month dollar cost averaging into the companies that I knew, I'd be sitting well. And I will say I did get into crypto when Bitcoin was 3,000 before it's run to 20,000.
Yeah.
I was in a lot of altcoins and I had them in cold storage and was never going to touch them.
Yeah.
I ended up losing my job and had to cash out. But if I wouldn't have touched them, even with crypto at current prices, it would be 7 figures.
Jeez.
So it's pretty painful.
It's about not deviating from the strategy, right? Which it sounds simple, but it's really not. It's hard because life happens.
Yeah. I mean, staying in the market. Now, I will tell you to this day, I do swing a couple small caps. Like I got a friend who,
of course you do,
he's a killer trader.
Yeah.
And I wouldn't recommend blindly following somebody's trades, but I've been doing stuff off and on with him for like 3 years. Cool. And I don't have time. So like, I don't follow exactly. Sometimes I'll stay longer or get out of a trade quicker.
Yes. But you know the underlying fundamentals and, kind of, what you're doing, if I can put it like that. It's not like someone that's gotten zero experience and just sees a stop loss and a take profit and then just, goes about that blindly.
Yeah. I mean, my biggest thing is like on this trading account, never putting more than 10%.
Yeah. But also I'm a firm believer in if someone's research is good, and they are good over a period of time, there's no harm in using someone else's research as long as you are educated in how it actually works, so that you don't turn around and blame that person for when that probability doesn't. So as long as you say I fucked up, then it's fine. Then if there's someone like offering reputable research, because I mean that's ultimately these big financial institutions are giving you their research. Yes, they're charging you a fee.
Yeah.
But that's what it is. Dude, it was such fun having you. If the listeners want to go and connect with you and find out more about what it is that you do and your experiences, where can they do that?
Best place is LinkedIn. I'm pretty active on there, post pretty regularly. I do also have hinkleconsultinggroup.com. So I do some consulting, whether it's fractional leadership or one-on-one coaching from everything, how to break into tech, how to leverage LinkedIn, or if you're a rep, just how to go about working big deals and getting them across the finish line. So
awesome.
LinkedIn and the website.
Awesome. I put it in the comments. Ladies and gentlemen, absolute legend. Go and play a round of golf with a man if you can and buy him a beer. I promise and guarantee you it would be worth it. To our listeners, peace, love, and prosperity. And we'll catch you in the next one. Cheers.